Good morning, everyone. Welcome to the On Time On Target Morning Brief, where we invest with fighter pilot precision on a daily basis. Today, we're going to talk about the much awaited and super hyped up Robinhood IPO. Under the ticker symbol HOOD, HOOD. Again, Robinhood has been a name that has been very popular in the millennial space, especially, but across all ages, honestly, largely because, and this is my opinion, from their marketing scheme, right? Robinhood, steal from the rich, give to the poor, redistribution of wealth in the United States. I mean, the name is perfect. It really is very attractive. Their user interface experience on the app. I haven't been on it, but I've had some people walk me through how easy it is, and they kind of nailed that, right? As far as the app, ease of use, ease of signing up. When I sign somebody up, I give them the actual contract, and they actually can read it, and that sort of thing. When you go through one of these apps, if you've ever done this, there, click the terms and agreement. Honestly, that's like you're signing like a 20-page contract. Yeah, okay. I'm not sure. I mean, obviously that holds up to legal scrutiny. I'm not sure I could pass a SEC inspection based off of doing it that way, but they're surviving it, right? But they don't charge anything for the trade. So they sell, in the past, they've sold the order flow. I think they're still doing that to some extent. Obviously, that's, if you're getting something for free, then you're the product. We all know that. They're making money somehow. So selling your orders, so you're not really getting best pricing. So you're not paying for the trade, but you're not getting the best price either, like you would through a traditional brokerage, if you will, that's making money in other ways. Again, I've been very open about how Schwab and TD Ameritrade make money. They make money from you sitting in cash. Right. Just the way the banks, small town America could have one McDonald's and 7 banks. It's because people like sitting money in cash, and then people in the banking industry know how to make money off of that. And, they do, and a lot of it. And you're happy because you get paid your fraction of pennies, and they just make 4 and 5% off your money. So that's what they're doing. But Robinhood's not doing that. It's not making money that way as far as their primary revenue stream. Obviously, they've run into some legal troubles. They got a $170 million fine, month or two ago, for some of their business practices. Obviously, during the height of the sell-off of COVID related and other things they ran into where you couldn't trade some of the names. I'm sorry, it wasn't the COVID, it was the GameStop and AMC and the other names that were in play through the Reddit kind of craze, if you will, at the height of the craziness. You couldn't sell your positions, and obviously you're not going to run into that at the bigger brokerages. So a lot of bad blood out there. But so, what am I saying? I'm not going to participate personally. I do have clients that want in on it. They think it's the future. So, hey, I've said my piece, and I put them right on into the opening today. When will it open? Mid-afternoon, early afternoon, Eastern time has been when they've opened. We're going to review DIDI, which flopped. We're going to review Coinbase, which flopped. DNUT, Krispy Kreme, complete flop. And then the ones that have been successful are Palantir and Ason. So we'll review those charts and kind of talk about, do you need to be in these at all costs? So I'm largely sitting this one out as personally and professionally, except for the few folks that want in. But do your own due diligence. Maybe it goes right to the moon like IPOs used to. But so far, 2021 has been a poster child for basically IPO greed. $38 is the current share price for Robinhood, is what they anticipate it opening at. Ha 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 ha. Because you know what, it won't open there. It'll open at like 45. So you can't put a market order in, which is nice because that helps you save you from yourself. But if you want to buy it right at the IPO, then you're going to have to put a market order, or a limit order in for like $45, and maybe you get it and maybe you don't. So anyhow, we'll talk about more about how you play that here in a little bit. All right, our question of the day is capital gains tax brackets. We talked about it yesterday, what is and what isn't a qualified capital gains. We'll talk today about how what those actual brackets are, and how most of the stuff in the tax code is a marginal tax rate, which means your next dollar sort of thing. Well, capital gains aren't that way. If you have enough capital gains where you trip the next bracket, well, that's all of your capital gains right now. So you really want to, when being tax smart, really want to make sure you know what you're doing in the capital gain space, or you're just at the end of the whip, and you pay whatever it is, right? Which honestly is what most people do. All right, for our longs today, Tilray, obviously the marijuana space has been in play with a lot of legislation that has potential to at least not, if necessarily, be passed. That might be optimistic, but certainly brings the conversation to the forefront. So Tilray is obviously a very popular name, arguably the most popular marijuana name amongst the millennial/younger investors. So a lot of momentum in that name when it picks up. So we'll look at Tilray long. Also, DIDI has finally, looks like, appears the bottom is in. It was up big yesterday. It's up big this morning. It touched 40% higher this morning. It's back down around $10.50, which is right around that 20% up. I will say this, DIDI is a must-own long-term stock. Question is, when do you get in? Question is, when do I get back in? I don't know. I don't have that answer yet, but I will have that answer by the end of the day because I need to make a call on it before I wake up tomorrow and it's at 14 and then I'm really mad. So, you know, DD is in play. It is a long-term must-own stock. I consider it to be like an Apple, to be honest. That's how strong I believe in this company. You know, and we don't know if the Chinese regulation part is over or not. You just don't know. That's an unknown. So you take that risk, right? But it's going to be a short-term risk, even if it hits the stock for another 6 months. Long-term, you're going to be happier in that name, in my opinion. Okay, our short out there is Nikola. You've heard me talk about this basically from way back when Nikola hit the scene. I can't remember if it was an IPO or a direct listing, but Trevor Milton's been bad news from the get-go. He finally got charged with fraud either last night or this morning. Don't know when the headline came up, but everybody knew that was coming, right? They started the company. It was a bunch of hyperbole. Everybody, he talked a big game, except at the end of the day, they weren't producing any cars, right? So they have this like $1 billion valuation, and their number of, that metric is over here. And then the cars made to date metric is like 0. Okay, well, so he's making, at the top of their hype, they were making as many cars as Anchor Star Wealth was making, right? i.e. 0. So obviously he's finally out and now he's being charged, but the stock is still getting hit because there's a hangover there, right? And why is that? It's because the people that his culture, the people that he brought in and who joined this firm are still there, right? So that's the question, is what kind of people are these that sat back and basically rode this wave of, they're on the inside, so they all knew about it, right? So can you trust them? Can you not? I don't know. I wouldn't trust them. I'd just take a complete pass on the name until they've turned the whole thing over. Kind of like Luckin Coffee. They basically turned everybody over. So that's what we're going to talk about today for the longs and shorts. If you're catching us on replay, thank you so much for checking us out. Hit the subscription please subscribe and hit the notifications bell so you know when it goes live every day. And if you want to join us live, come on in the morning. It's $25 a month. You have a chat window and a Q&A window that you don't see. You can ask questions. And with that, let's go ahead and get started. All right, here's our lineup card for the day, sharing that out. And now, all right, today is Thursday, July 29th, almost to the end of July. All right, standard disclaimer applies. This is a financial education presentation. You have to do your own due diligence for acting on anything you read this morning. Full disclaimer information is available at ototnow.com. Excuse me. We got allergies going on here in the office today. Pretty rough. All right, mission objectives: grow our money, protect our money, and live off our money. Today, we're looking at growing our money through speculative names and direct listings like Robinhood today, or not to grow our money that way, right? So, I'm coming out against it, but hey, if you want to participate in it, then take the risk and you'll be rewarded or punished either way on whether you're right or wrong. That's called investing. So to me, it's not worth the risk. If you think Robinhood is the future, then by all means, hop on in. But that's what we're going to talk about today. Capital gains tax brackets, we'll get to that after we get through the opening trades. Our flow: long, short, open, short, long. We'll do a market review, go around the world, come back to look at the U.S. headline review. And then the long-term investments, we're going to look at the previous direct listings. Again, this is a direct listing. It's not a pure IPO, but a direct listing where the company takes it straight to the consumers. They have a big pocket of shares. They're going to release those shares throughout the day. Right now, they've set the range is $38 to $42, and they've set the opening price at $38. So I think they're trying to make it look like they're not being greedy, by setting at the bottom of the range, but it kind of doesn't matter where you set it because that first trade probably goes off. It might take 45. We'll see. You'll see later today if you're watching it. Otherwise, I'll debrief myself tomorrow and see how close I was to on that call. All right, we're gonna look at DIDI coin, Palantir, ASON, and Krispy Kreme, which is donut. 3 of the 5 of these have flopped, and the other 2 struggled out of the gate. So really, what that tells you is the pricing to date from all the investment banks and companies has been too high, right? Things have struggled. So you really, maybe they're resetting Robinhood lower so people can get in on that. I don't think so. I think greed wins out in the end with these folks, but that's just my take. All right, we'll get into short-term execution, and contingencies and academic resources are standard. All right, let's take a look at where we are in the market. This is TD Ameritrade Think Pipes. Here's the trading setup. We'll come back to this. We've got the SPY, Tilray, DD long, and then Nicholas short. As far as where we are in the market, a couple of down days, but pretty small, right? Really, so not a whole lot of negativity in the air. The infrastructure bill should be passing sometime soon. The Olympics are kind of a feel-good story all the way around, even with some tragedy thrown in, of course. But overall, really, we're not talking taxes yet, other than Elizabeth Warren is starting to make some noise. So it's coming, right? Maybe August, maybe September, taxation's coming. We will worry about it when it does. When you look at the 5-day chart, some congestion here, but the futures are up today. You can kind of see it's trending higher. All right, let's go over to the headlines. We'll take a look at those futures on Google Chrome. Right here, I'll refresh that for you. Talk about the DD headline here in a second. So kind of mixed. NASDAQ's in the red a little bit, but Dow and S&P are in the green. Europe green across the board. Asia green across the board. Look at Hong Kong up 3% after getting hit pretty hard. Bonds 1.27, not much of a story there. Same with oil, not much has changed. Gold and silver are popping. Rate hike, we had the Fed meeting yesterday. We didn't really talk about it, but basically what did he say? He said same, which is, what he said for like the past, year and a half, and what he's going to say for the next couple of years. Same, right? Crypto kind of flat compared to the action we've seen lately. All right. GDP crushing it. The economy goes higher. The Delta variant may affect you and me as far as where we're wearing masks or not, or going out or not. But anyhow, largely the economy is not going to be affected, in my opinion. There's Trevor Milton. Again, he had a sketch history going into Nikola, and now he's adding to his sketch resume, if you will. Why is DIDI going higher? The DIDI leadership said, okay, China, if you're going to continue to regulate us, we'll just go back private. Right. But then it said no, we're not doing that. That was more of just a commentary. So that's why the stock is going higher again today. Okay, let's look at DD real quick since we're talking about it, then we'll get ready for the open. So here was the opening at 1420, I think was the exact number. It popped up that first day and then ended up in the red off of that first day, kind of popped up again. And then basically has been selling off hard ever since. The other one that has just been a house of pain, and it's more recent, is Krispy Kreme. If you think the wave of the future is donuts, all right, have fun with that investment thesis. Yeah, it opens up, it pops way up, and then basically it's been selling off every day since, right? So a lot of pain there. Let's look at a good news story. We'll look at Palantir real quick before we get set up for the open. So there's Palantir, kind of flatlined out for 3 weeks or so, and then kind of made its gains, and it really, it equates to a flat line for about 9 months from there. But again, good long-term story. But the money was made. The good double was right here, a few weeks after the IPO. So consider. All right, with that, we're going to go over to the TD Ameritrade Think Pipes platform and set up for the open. Good morning, everyone. Welcome to the on-time, on-target play of the day. Here's the open. All right, you have 4 screens in front of you on the TD Ameritrade Think Pipes platform. We have the S&P 500 over here. You can see it's in the green. That's a 1-minute chart. We have Tilray over here, which I do like long. Marijuana stocks have been in play, so we're looking at taking that long. I really like it. And then DD's up 20% outside of our trading model, so we're not going to take that. Nikola is your short, down 10% so far. I just wanted to show you this chart, though. I still got my eyes on Tilray. I kind of like that long, but boy, is that selling off hard. Let's look at Tilray again. 16.10 your stop. Let's go a 15-cent stop. Let's go 20 cents. 16.30 is your entry point, going higher. There it is. 16.30, you're into the trade. Again, I didn't really talk much about it, but we got to cover down to 16.09, so it's a 21-cent stop. I'd prefer 20 for the math, but 21-cent stop. So into the trade, we're long. So basically, get you the arrow in there. And our first star point is 1651. And then 1672. And it's not going to matter because we busted out the bottom. So right there, we covered down to 1610 and it didn't hold. So you take a 1 hour loss and you have to, don't want to hop back into that, even though this is a great story long here as well. But out of the trade this morning. Okay, over to Nikola. Let's take a look at the, that's down 10%. I did want to show you this is, there was what, a month and a half ago. It's up here at 20. It's down at 12. So to focus in on the today's chart, you can see down 10%. Again, this isn't because of him per se, Trevor Milton per se. It's more along the lines of all the people that he brought in are still there. So the big concern, can you trust them or not? Or are there bad days behind them? Kind of like the Luckin story. So here you have the trade here as far as Nikola. No real option to get in on this. It's just kind of selling off. Actually, look across the board. All three are selling off, even the two longs we have. So yeah, no real entry point for Nikola unless you just stabbed at it out of the gate, but certainly can't take it here. All right. DIDI selling off, so maybe get a better entry for long term there. Let's look at some other names that have the volume. Vaxart, VXRT, up 8%. No real entry there. Nokia, the phone maker, Nokia, not sure how it's pronounced, one of the two. No real entry there. It's gapping up 5%, but not big option to try to set up. And then Tall, TAL, bless you, Tall, TAL, selling off hard after being up earlier. So again, no entry point there as well. So really long, I still like this Tilray long, but it's well outside of our metrics now. You would have to cover at 15.9, go in at like 16.10, and then take it higher from there. So, all right, we're going to get rid of the trades today. That did not work, and I don't think any of them would have, and go over to what's going into the long-term stuff. TQLB is in play. It's a speculative name. I think there's some advertising news. It's going international or some story out of that. CLXPF, spec name, Cybin there. QCOM going higher. Must be some news on QCOM. Let's take a look at that. That's Qualcomm. Maybe they had earnings. It is your best pure play 5G play out there. Yeah, beats earnings, beats revenue, and guides above consensus for Qualcomm. So that's why they're moving higher. All right, Zoom, Clickstream, C Limited, Silver. Don't know why gold and silver are in play, but they are. The Chinese names, Alibaba's up. I saw KWeb earlier was up a couple percent. I don't see it on the chart now. All right, let's take a look at the downside. You have Nikola selling off 10%. Facebook, AMC's down. Facebook, the headline was, try to pull this up on another screen. It was from their conference call. Expects year over 2-year revenue growth to decelerate. So Facebook is saying we can't continue to grow at the same rate that we're growing. So a lot of people are, probably taking profits there. I'm still going to stick with it. It's the #1 advertiser out there. Beats Google, right? So Facebook first, Google second. Trade Desk and other names selling off a little bit again in the advertising space. So prints money over the long term. DraftKings down, MJ's down, CBD down a little bit. Win in the red a little bit here, 0.5%. Again, trying to wait for earnings on Win, but it's been a house of pain. So may get rid of it today as part of the rewicker back into DIDI. We shall see. It's down at, 100 a share. I don't know exactly when the let's see, earnings was 5/10, so that makes it 8/10, August 10th. I don't know if I can wait 2 weeks for earnings, to be honest. All right, that is it for the longs and shorts. Let's go to our question of the day is over here on capital gains rates. Again, the reason this is tricky and the reason I want to cover this is because, and the good news, these are knowable, meaning here's your chart for capital gains. So again, I'll kind of talk the married numbers, if you will. Up to up to 80,000 you get for free, right? So that's pretty significant unless you know, if you're under 40, you know, or I don't know, I guess I shouldn't tie an age to it, but you know, if you're at the net worth / you know, making 6 figures, doing good things in your life, you know, 80K is a lot of capital gains, right? So pretty good return there. You get the first 80K for free. From there, the second, from 80K up to 500K, $500,000, you're going to pay 15%. Again, that's most of us. If you're up in this category, you're probably selling a business or selling, you know, or you know, you're pretty well to do if you got 500,000 of capital gains in 1 year that you couldn't spread out, right? You may have that gain, but spreading it out is obviously the smart way to do that. So 0, 15, and 20. But yesterday you were talking about this 3.8 thing. Yeah, let's look at some fine print. So you get down here into, yeah, literally, I mean, this is how hard this is to find. So much so I can't find it, even though I know it's here because I looked at it earlier. Anyhow, 3.8, here it is. Investment exceptions. You may be subject to another levy, the net investment income tax, if your income is high. 3.8 on your investment income, including your capital gains, if you're above 250,000. So really, this chart's a little misleading. So take a 250 here slice, and that means from 80 to, well, it depends. These are your capital gains, but if you go back to your income, if your adjusted gross income is over 250K, then you have to add 3.8%. Okay, so you could be paying 0% or 3.8% if you're high income, or you're paying 15% or 18.8% if you're high income. And then most assuredly that if you have $500,000 of capital gains, you probably do have an income combined over 250,000. So you're actually paying 23.8. Okay, so that's obviously quite painful to calculate. Obviously, you know, the tax software will do that for you. But kind of knowing that that's out there and what the capital gains rates are is pretty helpful. Now, these could all change. I think they're going to be given a hard look at, if you will, during the tax review. We're going to see at the end of the year here with the Democrats. But the big takeaways are, you know, if you stay below a decent amount, it could be 0, or you might trip over into 15. But if you go $1 over this 80,800 to go to 80,801, the entirety of that capital gains is now taxed at 15%. So it's a hard trigger versus the marginal tax rate, which is a soft, you know, a marginal trigger source. So some other things you should know out there. If you're in collectibles, it's 28% rate. So if you think art, some people will say, and you know, the rich will tell you that the art is the best way to store value long term. So you know, consider if you're into that space. If you own a house, I had this conversation, several clients are selling houses. If you live in the house and you meet the ownership requirements, you get to 250,000 of capital gains excluded, up, and if you're married, 500,000. So you can make a bunch of money on your own house if you lived in there for 2 of the last 5 years. Okay. However, if it's investment real estate and you haven't lived in there in 2 of the 5 years, then now it becomes a business asset. And now you have to A, depreciate it, and B, you can't, you know, any money you make is reported as a capital gain. Now, here's the kicker. This is what I think is a kind of a bogus rule with my investment properties is you have to depreciate them and they have to recapture at 25%. Well, the 2 houses that I lived in, you know, bought, lived in, turned to investment properties and subsequently sold, I made a ton of money for several years because of the tax benefits of doing so and taking the depreciation. However, when I had to pay that depreciation back, I had to pay it back at 25%. And at the time, I'd never paid 25% taxes in my life. So really, it turned out to be I'm paying more taxes than I would ever would have at that time. So just realize there is a payback there when you sell an investment property when it comes time to file your taxes. All right, that is all I've got for the today. And yes, you can carry over capital losses. Not many people have those, but if you can, yeah, I see the Hunter Biden commentary there, Apex. That's pretty funny. If you do have capital losses out there, they offset capital gains 1-for-1, but then you can also carry them forward. You can exceed those losses by up to 3,000, but after that, everything carries forward. So, all right, that is it. What I have for you today. Thank you so much for checking in. We'll be back with you tomorrow. Have a good one.